Hey everybody, it's Monday, October 4th, 2021. Thank you so much for being here. We've got some important economic updates to get to today. We're going to talk about the markets, the rising prices, where things are headed, how to prepare, and much, much more. Now, first of all, there's some of you that are not in the markets, and sometimes I read your comments and you'll say, JJ, why are you talking about the markets? I'm not invested, I'm not in the stock market. What's happening right now in the markets and in the economy in general is going to affect all of us. If you're someone that works, you're going to get a bigger portion of your income taken to help pay for all these programs, to help pay for all this debt, all of the stimulus, all the market propping. Yes, they can create money out of thin air, but they're still going to try to take more from you to, well, to make people believe that they're the ones that have to pay for this, when in reality, there's a printing press behind the scenes that really not too many people know about. A very small number of people actually know about it. And that's where they want to keep you, the reason why they want to keep you in the dark. And we're here to shine some light on some of this darkness and give you another dose of economic reality today. So let's go ahead and get started. Let's start right here with third quarter GDP for the US. It has slumped down to 2.3% despite massive monetary stimulus. Now we know that GDP is pretty much it's a scam number, all right? But it is a number that's widely reported as showing the strength of the US economy. But we know it's mostly based on consumer spending, thus based on US consumers taking on more debt to do the spending. Now, we do see credit card debt and spending overall starting to increase. Part of it's because the prices are just higher, so you're going to see more spending because of higher prices. But even as false as this number really is, GDP, we still look at it compared to previous GDP numbers, and you can still see a trend. And despite all of the stimulus, think about all the programs and packages and just spending and the run up of the debt, and we're still not seeing GDP take off like we really should, considering all of this stimulus. Now, this website gives us a chart here, and this is confoundedinterest.net, and it gives us the M2 money supply. It gives us the Fed balance sheet, the yellow line. M2 money supply is in the green line. Fed balance sheet is the yellow line, and we see the GDP to the far right here down to about 2.3% right now. So what is happening? Where is all the extra stimulus going? Well, I think most of you probably know the answer to that now. It's going into the markets, it's going into rescue programs. And guess where most of it's going to end up? It's going to end up in the hands of the top 10%, but yet they're still going to tell you and me that we're the ones that have to give up a larger portion of our paycheck to help pay for all this. All right, are we starting to see the scam here yet, folks? I think most of you do, and I'm glad of that. I'm really happy about that. Now let's talk about some inflation forecasts and how it may impact the markets. And this is Jeremy Siegel. He's the economics professor at Wharton. His official title is finance professor, but let's take a look, or take a listen and look at what he has to say about the rising prices and how it may impact things going forward, and how the money printers are likely to respond to this.
Well, Dominic, I think we're headed for some trouble ahead, and I think we've been hearing about what's going on in the energy market, natural gas prices, oil prices, but inflation in general is going to be a much bigger problem than the Fed believes, and I think there's going to be pressure on the Fed to accelerate its taper process. And I do not believe that the market is prepared for an accelerated taper. So I think you're right, it's seasonally, November, December are good, but I'm looking for some turbulent times here in this fourth quarter.
Okay, so he's talking about the Fed tapering. Now we have to revisit this. We know that Fed tapering is another term that's put out there, but it really doesn't mean anything. tapering can just mean a slowdown, right? So if you're going 500 miles an hour and you slow down to 499 miles per hour, you're still going pretty fast, right? So the Fed slowing down in their asset purchases and their market propping doesn't change the fact that they're still purchasing assets, propping up the markets. The money printers, the Fed, they've basically taken over the banking system right now with all the repo, reverse repo, all of the asset purchases, mortgage-backed securities, you name it. The Fed is buying it all. They're the buyer and lender of last resort. What we're seeing right now is a completely manipulated, phony, non-free market, non-capitalist economy. Unfortunately, because if all those things weren't in place right now, things would be a lot easier for most people in the United States. And around the world, this is global. Now, speaking of global, let's talk about the supply chain disruptions and what's happening right now with the food supply. And we're headed over to the Guardian here to the UK for this report here. Up to 120,000 pigs in the UK face culling due to lack of workers. Basically, this is a more supply chain disruptions. So they don't have enough people to do the labor to process all of the meat, in this case the pigs, and getting rid of this many pigs. I mean, this is sad. And there may be a lot of vegans out there. I'm not sure how many of you out there that eat sausages and hot dogs and whatever else. I'm not sure what they're putting in the hot dogs nowadays, but all the things that this type of meat goes into. Pork products, very common in Chinese food and Asian plates. And this is what we get when we depend on someone else for our food. Most of us, myself included, I'm not self-sufficient. I have to go to the grocery store, and we're all in some way at mercy of this food supply chain, the delivery systems, the labor behind it. It all goes back to the farmers. We're seeing, water shortages, farmers disappearing faster now than at any time in history. Buried under rising debt, rising prices, inflation, rising energy, transport costs, cost of doing business. And this is happening here in the U.S. And, we're going to see more stories like this. In fact, we did see some similar stories just last year in the U.S. Let's just take a brief stroll down memory lane here. Millions of U.S. farm animals to be culled by suffocation, drowning, etc., because of the same thing, supply chain disruptions. In this case, we had a lot of those meat plants that closed down, and a lot of foods, even food that's being produced, is not being given to the people that actually need it. So this is it's a big waste and it's a big disappointment. It's a big problem where we all are basically herded into these cities. Most of us, anyways, into these cities. None of us grow our own food. None of us have our own source of food. We're all, most of us anyway, dependent on some sort of supply chain to get the food on our plates. Now let's end this on maybe a positive note. Here's what they're doing over in Turkey, and yes, it could be done here in the U.S. if we had people that actually would think about doing this. But Turkey to open 1,000 markets to contain, or to counter rather, or you could say contain, to counter high inflation. You see, when there's more production and more goods being produced, including food, then prices come down. Istanbul, Turkey. The president there has ordered agricultural cooperatives to open about 1,000 new markets across the country to provide suitable prices for consumer goods in the face of nearly 20% annual inflation. Now, this is something that I've heard a few different economists talk about. People like Richard Wolff, they talk about cooperatives. In my opinion, the free market, less top-down control would be the best solution, but this is something that may help some when you have cooperatives and more growing, simply more production, more growing of food. But it had to get to nearly disaster points before this was implemented. Annual food inflation of nearly 30% is what they were seeing over in Turkey, and we're starting to see numbers that are pretty scary here in the U.S. We're definitely in double digits year over year, cost of food going up. And again, I'm definitely not saying, I want to be clear, I'm not saying that this top-down cooperative plan that comes from the top down is the best way to counter rising prices. In my opinion, it's the free market and less intervention, less manipulating by the money printers. But this is what some countries are resorting to combat rising prices. So I thought I'd put it out there. Let me know what you think about this GDP number. It's still dropping, even with the record stimulus. Where's the money going? What's your opinion on that? What about the warning from Jeremy Siegel about the Fed? They're going to taper, and that's going to cause markets to panic. Tapering is just a slowdown, in my opinion, so it's not going to really amount to much. Instead of stimulating the economy with a million shots, it's going to be 900,999 shots. The food supply, the culling of all these animals, pretty sad. But that's where we're at, folks. Thanks for watching, everybody. Stay well, stay safe, stay prepared, keep stacking. Bye for now. Stay positive, stay healthy. Bye. Peace.